If you're trying to wrap your head around the UK economy at the moment, let me see if I can help. So the Bank of England had to step in recently and had to announce a £65 billion operation where they're buying back bonds. So I made a video on how the recent mini budget announcement has completely crashed the pound and has led to a soaring of the UK's debt. So if you didn't know, the UK economy, along with many other economies, are suffering very much right now due to high inflation. As the UK imports most of its goods from outside, the weaker pound has not helped, increasing inflation even further. So in order to combat inflation, the central banks need to actually increase the interest rates. And this is where the bond market actually comes in. So a bond is a loan that investors make to a bond issuer. So governments and companies use bonds to raise money. And there's an important word when it comes to bonds, and that is bond yields. So a bond yield is basically a percentage number that corresponds to what the investor will get back at the end of the bond term. So bonds can be 2 years, 5 years, 10 years. It all depends on who's issuing the bond. So when interest rates increase, bond yields actually increase, which is a good thing, right? You're getting more money for your bonds. However, the bond market suffers in response to that. Because bonds are fixed year contracts, when the yield increases on the newer bonds, the older bonds become much less valuable, because why would you want to pay for the same for something that gives you less money in the long run? That leads to a tumbling of the bond market, which is what we're seeing right now. So the mini budget represents a £45 billion in borrowing. A lot of pension companies actually keep their money in bonds, because if they kept it as cash, inflation would just eat it all up. The way that pension companies make money is that they take your money now, they invest it in all sorts of risky endeavors. But recently, due to the decline in the pound and other economic factors, these pension companies had what they call a margin call, which is not a good thing, meaning that they've incurred huge losses, and if they don't put in money to cover their losses, they can lose everything. And in order to fulfill these margin calls, these pension companies had to sell so many bonds, leading the bond market to tumble, you guessed it, further and further. And the Bank of England had to intervene, because if they hadn't done that, by the end of the day, some of your pensions would have been gone forever. So the Bank of England had to step in straight away and announce that they're spending over £50 billion in buying back government bonds in order to stabilise the bond market. This buying back of bonds essentially means they are printing money again. And in case you didn't know, the reason why we're in this high inflation mess in the first place is because the US government printed about half of all dollars ever existed back a couple years in the pandemic, leading to what we're seeing now as all this high inflation. So this caught everyone in the financial industry off by surprise, because what the Bank of England should be doing now is to be selling their bonds instead of buying their bonds. But no, they decided to actually print more money, and therefore the economic outlook of England is not looking great. So as I said in my previous video, when the demand for the pound goes up, the value of the pound goes up. And if the demand of the pound drops, then the value of the pound drops. So currently, foreign investors do not want to park their money in the UK because the economic outlook looks too uncertain. So for the time being, it looks like unless drastic action is made, the pound could be weakening further, meaning that it's going to be ever so much harder to be living in the UK. But if you're American, come here, because everything is at least 30% off. Make sure to check out some of my other videos, and I will see you in the next video.